So in the overnight session, the market held above the previous VPOC of 3022 and then pushed into the 2875 to 31 quarter, where we got a little bit of selling, but overall the market has been holding up quite well. And we know that Friday marked an upside breakout, and at this point heading into the open, the buy side is more dominant and in control, but at the same time it's now testing and trying to break out to a fresh all-time high. So heading into the open, our short-term bias is going to be neutral bullish, and the intermediate term bias will be bullish. And Friday's breakout can remain intact above the 0975 to 1175 support. And then on the upside, a break above 2875 to 31 quarter would mark a fresh all-time high, and above 31 quarter there is no hard resistance. So the resistance levels above 31 quarter are purely based on range expectation. So in the event that we get a successful breakout above 31 quarter, ES can quite easily head up into 35.75 and 39 quarter. And if we get a pickup in volume, then the market could even tag 44.5 to 47.5. And by that point in time, unless we're running on significantly above average volume, the range potential of the day would have been met, and there would be limited upside on the day time frame. And again, it would take a pickup in volume to even reach 44.5 to 47.5. So that's something that we will have to monitor in real time. In the overnight session so far, the pace of price action has been fairly slow, and in order for the market to continue moving higher and break to a fresh all-time high, we don't necessarily need big upside momentum. We just need sustained upside momentum where the tick is spending more time above zero. And don't let the pace fool you into thinking that the market has topped out. Even if the market's running on slower pace and limited upside momentum, it can still continue slowly heading higher. So it doesn't necessarily have to blast off to a new all-time high. It can move at a slow and steady pace, but still continue heading higher. So given our current directional bias, we are going to exercise caution on the short side, and our focus is going to be much more so on the long side. Now, if we're not seeing bullish conditions in real time and we're not able to find a high reward to risk entry, then it's okay to just sit out and not take any trade. But just because the market's a bit slow and perhaps moving higher at a slower pace than we'd want, it's not a good enough reason to short the market as it's making fresh all-time highs. So that is the market context heading into the open. Let's see if the buy side can maintain the control that we've seen here in the overnight session, and we'll take it from there.